Hello, people. Welcome to another episode of The Everyday Trader. This is Eric Hale, and I'm joined by my friend and colleague and partner, Greg Jensen.
Hey, maybe we should have started this episode with a yeehaw instead.
Yeehaw. And you know what I was thinking? We should have actually done it. We should have done it when we were in Jackson Hole together.
We were in Jackson Hole. For those of you who are like Eric flew out here. I don't live too far from Jackson Hole. I'm about an hour west of Jackson Hole, but Eric flew out here. We had a economic conference we went to. You stuck around and went to the rodeo. How was the rodeo?
The rodeo was fun. I don't know that I think I went to a rodeo when I was like 10. So yeah, it was kind of fun seeing people out there. And I was kind of interested in trying it, but I know me, I would be getting another bodily injury. So I saw a lot
Yeah,
of
yeah,
people.
no, no. I don't want a back fusion anytime soon. So I'm not gonna sign up for the rodeo.
Man,
I
some of those they get kicked off those bulls and the cows or the horses. I mean, bucking broncos, they hit the ground pretty hard, and then the if you're not careful, they'll come right down on top of you with the hooves and then go after you with the horns. It's,
It's kind of like having, long options on a tech stock today, is what it feels like, right?
Right. So it's an interesting day in the market today. We've got a lot happening with CPI being released today and then major rotation happening in the market. We've got I think the SPX is up, but we've got some of the big equities that are down. I mean, multi percent. I mean, it's Nvidia down over 4%, Tesla down I think 6%. Is that what it is? Tesla down 7.6, 7.8%.
Yeah,
Not even
Tesla down
close yet.
7.8,
Yeah.
Netflix down 4%, Meta down 4%. Yeah, it's across the board. The rotation, the big cap mega cap tech rotation maybe is starting to happen today, and I'm sure there might be a reason why, but before we do that, let's maybe the inflation report is the reason why. Let's talk about the CPI report that came out today. Um, and then we'll fill you in on this conference we went to together too. We had, like I said, former member of the Federal Reserve there, Dennis Lockhart, a lot of big investment banks there, big strategic research houses there, and had a very in-depth discussion about what's going on in the economy, what's going on in the market. So we'll get to that later in this show, but let's talk about today's data first. CPI first month to month uh, decline in inflation since 2020, if I'm not mistaken, since just after the pandemic, what was going on during the pandemic, and the yearly number down to 3.0%, at least the headline number. I know the core is still at 3.3, but both the readings were under forecasts, under expectations. So we got a good CPI print today. Why is that causing the market to go down?
Well, and I just want before we go too far down that path, I like to look at these to peel the onion, as we say, and look a little bit deeper. I like to do this chart where I look at the importance of the items on CPI. So the orange line are the changes of in percentages of what's happened, and you can see, and the blue lines are the overall importance. This is technically indent level 4 if you're familiar with the table. And if you look, the important stuff, I said last time, if you look and kind of squint your eyes, there were a few things were down, but I mean, here it looks like the important stuff is almost all significantly lower. We've got rent to shelter, which is one of the most important parts here. It's the effectively all the housing pricing goes into this, and it's 0.2, which is a really reasonable number. That's what we'd love to see here. Let's see some numbers that are low like that. And this is and here we go for month over month change. So everything that went up, your Rolex watch went up, Greg, and recreational reading materials. So if we look at the things that are up significantly, they don't have big blue bars. They're not very significant. If we go to the bottom is what dropped a lot. The gasoline is the biggest thing. We've got gasoline with a minus 8.8 month over month. And we could talk a little bit more of that because we discussed some of those things in this conference that we went to. Um, but if you look at all the big blue lines in here, everything's kind of right where we want it. I mean, it's close to the level we want. These are month over month changes, so a two is still pretty 0.2% is still pretty significant because you annualize you know 0.2 number to like 2.4 over the year, which is not quite two, but still definitely this report is significantly different than all the other reports. And like I said, peeling beyond just the surface of looking at the headline and the core number, we're seeing measurable, significant changes in inflation and some of the important things. And this is what we needed to see to that Jerome Powell should get an award. He should get the Nobel Prize in economics, something. I don't. I saw some headline this morning that he should get some, be nominated for some medal or something for
Well,
getting this economy where it needs to be.
yeah, I'm gonna have to agree because although I know some of the talking heads out there are now worried about, they haven't moved fast enough on cutting rate. Well, they haven't done anything yet. So let's just say they haven't done anything as far as they haven't cut rates yet. But they are starting to cool inflation. The question is, are they going to cut soon enough? Are we going to end up going into recession? I think, and we've said this all along, the Fed has been okay with us going into a mild recession if needed to cool inflation, to squash inflation.
And seeing unemployment go higher.
Yeah, and see unemployment go higher because inflation is that painful. I remember yesterday at the conference having a couple one-off conversations and being part of just little group conversations about the pain, the real pain of inflation and how really bad it is for the average American. The upper 1%, yeah, it doesn't impact them that much. In fact, inflation arguably helps them because it has helped their asset prices go higher during all of this, and they're not impacted, at least as a percentage basis of their disposable income of what they're spending on an increased prices at the grocery store and an increased price at the pump. But the average American, and especially the lower half of the economic earning part of our society, have really been hurt by inflation. I mean, their budgets are really tight right now. They've had to rack up credit card debt, work second jobs. Fortunately, there's been second jobs for them to go get, to be honest. And so people have been able to keep making money to stay on top of that for the most part. But this is a good thing. I agree with you. I think the markets may be reacting today a little bit in anticipation now of the Fed starting to cut rates. And maybe it'll happen soon, maybe it won't. I know yesterday we were looking at the percentage chance of a rate cut that's currently priced into the futures market
In September.
For the month of September at, I think it was at 75% yesterday.
Yeah.
And what did you say it was at today? 90 something?
93%.
93?
Yeah. Right now
So,
it's changing. I mean, updates throughout the day. But yeah, we've got a 93% chance. So we've got this next meeting coming up is actually in July. And right now the odds are not a rate cut in July. But what one of the things we talked about at this conference, and maybe we'll dive into some more of these details, is Dennis Lockhart, who was the president of the Fed, and you and I have known Dennis. We've been fishing with him, and he's very candid and open. And we're not going to violate any confidentiality stuff here. But we did get some insight from him on how things work. And he made the comment, everybody wants to know what the Fed's going to do, and the Fed doesn't know what the Fed's going to do. And Jay has been very good about his narrative and being exactly clear on what is driving his decisions, and it's data. I mean, it's data dependent is what the Fed has been saying, and they're waiting for clarity that they've got inflation under control. And the fact is that the data is noisy. And he said over and over again that we have to be able to separate what's noise and what's signal. And the Fed is going to wait until they have clear indications of signals and then cut. And I think the consensus among people at that, I talked to several different people what they thought. Um, for a number of different reasons, there are people thinking we're not going to cut in September. And the election being one of those big factors that we could do something that could affect, and that's the other thing that happened today, and that is we've seen a dramatic shift in the odds of who would be the president, and specifically, or I guess who should be the Democratic candidate. That Harris is now pricing out at a 26 cent, which is 26% versus Biden. This is who wins the election here. So Trump's got a 60% probability. Biden, this is just in the past day. So this is something that shifted as well, that there's an 87%. Well, it says that she's on the ticket. I don't know. I guess, yeah, 48. This is the Democratic candidate data here. So there's a 48% chance that she's the Democratic nominee for president, and Biden is 37. Um, the we spent a lot of time talking about the election, and it is absolutely crazy, but we're just seeing the tip of it. It's just going to continue to get more crazy.
Yeah, there's clearly a concern amongst the the country, right, amongst the Democratic Party right now, of who is going to be representative, and they've got a window. They've got a really short window to make that decision. And so that could be another thing, maybe adding into a little bit of the volatility today. You and I have talked quite a bit about politics and how it can impact markets. Not our view on politics, but the impact it has on the economy and on the market. And the one thing we have both said is that the market likes stability. The market wants it doesn't want to be volatile. It doesn't want wishy-washy and uncertainty. And unfortunately, for the Democratic Party, they have just become, since that debate, they have become the party of instability, which is really crazy to say, considering
Right. That when you
who the Republican nominee is.
right, the
But that's
Republican
the
nominee is
stable guy.
he's the chaos. He's the agent provocateur. He's been the chaos in the past two elections, and now he's seen as the non-chaotic person. The chaos is coming from the Democratic side. I mean, there's one of the things that we saw in this conference, and some of this stuff was Chatham House rules, and we got to talk with somebody who is very well connected to both parties and both
Campaign.
campaigns, and shared a ton of data. And I was, how I love data, and he went down into tying things like approval rating of the president with the correlation of specific stock prices, and the charts lay right on top of each other. And I think that these two things today. So I popped up the IWM because if the IWM should do better. The IWM is the Russell 2000. It's an ETF for trading the Russell 2000. The IWM should do better. Smaller companies should do better in a lower rate environment. So this was the argument that we were seeing going from November to December, when we were sure we were going to have rate cuts in the early part of the year, and then they didn't materialize, and the IWM has basically gone sideways since then. And so now we see a huge jump today on an index. Seeing a 3.7% jump is massive, and seeing the tech sector swap. This to me is the market telling us we think there's a lower rate environment coming. Now, one day doesn't make a trend, and the zeitgeist right now is, I think people are freaking out about the market. I'll just take you back to earlier today when we hit an all-time high in the S&P 500. So I was listening to some news and reading some headlines, and people are losing their heads right now. We had an all-time high today Okay. Like what? Chill out. Like it, and one day doesn't make a trend. That although I was flashing up some charts here. I think this is funny. This Tesla one. We know exactly why this went down. So Tesla's down as we're talking here, only 8.5%. And that's because yesterday Jim Cramer said the company's going to be $1 trillion.
The
So
Kramer kiss of death,
the
huh?
Kramer kiss of death. And I saw people yesterday retweeting his tweet saying, sell now. And one of the worst performers today, you know, I've been fortunate to make the right decision to get into it, but I'm giving a little bit of it back today. Not like in that. But one day it doesn't make a trend, right? So we need to. In fact, I was going through our notes and Katie Stockton was one of the people there. She's with Fairlead, and she's a well known for her technical analysis. And I mean, specifically, actually, both her and Cameron Dawson from New Edge. She's CIO of New Edge. Actually, she's CIO of the year based on institutional investor. So, anyways, both of those two people, I have notes saying pullback is an opportunity to buy. So that's maybe, is this an opportunity to buy here, Greg?
I do. I think it is actually, at least in the short term, because I don't think that the liquidity that has moved this market higher since, well, arguably since COVID, um, to be honest. I mean, with the rally that we have had since we bottomed in 2020, and I know we had the pullback in 2022 that was due to inflation and the Fed raising interest rates aggressively, but the liquidity has never disappeared, and it's still there. And so,
You pause and back up and reiterate that as a part of our contention has been that the reason the market has gone is there's just too much money that's floating out there, and the money needs to go someplace. And this was one of the things that was discussed. We've talked about the Fed balance sheet, but even the reverse repo facility, which is something we look at and pay attention to pretty quickly. But we got some insight into there's actually another source of liquidity, which is new and different and has kind of gone under the radar. And traditional sort of economists and the people who look at the data, looking at models that are, if you're using any textbooks that's over 10 years old, this is um, it's never existed before, and that's the Treasury general account.
yeah, I made a comment on somebody's tweet. It was Brian Westbury, is a guy that I follow. This was on June 26th. He's the chief economist for First Trust LP. And he made a tweet on June 26th. And this is the first time that I had really, not, I shouldn't say the first time I had paid attention to it, but he talked about it. He said, I find this absolutely outrageous that the Treasury general account was $941 billion on April 25th, just shy of $1 trillion that they had put into the Treasury general account. In other words, and then, as of May 30th, it was $704 billion. So in other words, the Treasury dumped $237 billion back into bank accounts during May alone. Not the Fed, the Treasury put $200 billion back into banks from the Treasury general account. And that's just another slush fund, essentially.
Right.
And that's what that was my response is, add that to the reverse repo. And yeah, that's excess pockets of liquidity. I wonder how many of them are out there beyond the Treasury general account, beyond the reverse repo function at the Fed that we've talked about for some time. They're out there off the books. So I know those are the ones that we can look at and visibly see their values on a monthly basis or on a daily basis in the account of the
Do you
reverse
think,
repo.
I mean, where would it be? Would it be another country or private or?
Maybe off balance sheet. Yeah, there's a lot of, we call them black pools of money out there. Now, I still think it's a pretty good rule of thumb. And like you were saying, we got verification of things we've been saying for quite some time now. that you almost have to stay bullish in this market
Yeah.
and until that slush is gone, until that excess capital that's out there, in both the Treasury General account as well as the reverse repo function at the Fed,
Right.
until those are back to normal levels, which again for the Treasury General account should be relatively small. There is no reason for the Treasury General account to have $1 trillion sitting in it.
So the consensus from this event that we were at was that the election doesn't really matter.
Yeah.
It's going to affect certain companies. There's going to be some rotation that's going to happen, and that's why this our thought. I mean, I think a lot of people are looking at CPI, and of course, the presidential election is definitely having an impact as well. So there's two factors going on there, and that is that we might have a different administration with different people in the White House and maybe do things differently, and then who could be the is it going to be, is Trump is really gaining in strength here, and so when as people are looking at different policies, and certainly Trump talking about American exceptionalism and applying more tariffs, and whether he can do this 10% tariff, he probably can't even do it. But there was a comment made there. Was this in the conference or was this an elevator speech I had with somebody talking with somebody, that they were in Paris, and the people in Paris are very, very concerned about not their election, and they just had a major election. They're more concerned about our election. And they got two different sides of it. Somebody was telling their Uber drivers, one was like, you have to reelect Biden for these reasons. And then the other guy saying, you have to elect Trump. And his concern was that Trump will end the Ukraine war. And, if you think those things through, and let's not get political about it, but uh, and this seems counterintuitive because what you can see is weakness in defense stocks when Trump looks like he's gaining strength. So if we're demilitarizing and going to pull back from spending money, spending billions and billions of dollars over in tens of billions or hundreds of $1 billions in foreign wars, that's money that's probably going to harm some companies. So there is definitely some sector rotation and that we're seeing, and I don't think that any of the Biden policies, some of the industrial policy like the CHIPS Act, I don't think there's any threat to the CHIPS Act. I don't think that Trump would, and that maybe that's the fear that we're seeing with the Nvidias and the Teslas, uh, the tech companies. So there's something else going. There's a couple things happening at the same time. But like I said, one day doesn't make a trend. And this other big conversation that we had about liquidity, and long story short is there's 12 months, 12 to 16 months that of a tailwind of liquidity that we see, that we don't see, somebody else sees and presented very clearly to us. And if you believe that that has been a portion of the reason why the market's going okay, there's going to be some winners or losers in the market. There's going to be some puts and takes as to who does well. But overall, there's the market's probably just going to plow higher for at least the next 12 months, right through the election.
Yeah, I think it could something happen to make that liquidity go away faster? Maybe. Maybe we have a really sharp acceleration in unemployment for some reason. There are some maybes, but you're right. I think at the current rate of how quickly liquidity is being drained from the market, yeah, we have at least through next June, I would say, maybe even arguably clear through 2025.
Right. Yeah, that was there was some very specific data given and things to look at to determine whether it's going to be 12 months or whether it's going to go all the way to 2025.
I don't know if the reverse repo will last that long, to be honest, at the rate it's been going. I mean, just
But
as an
it's
example,
the
six
reverse
months
repo.
ago, 6 months ago, we were over $1 trillion in the reverse repo at the beginning of the year, or right around $1 trillion. We're now at 403 billion in the reverse repo. So, however, it's
But
kind of
it's flattened
flatlined.
out.
It has flattened out since about March. I mean, we were on a steady decline until March, but really the last 2 or 3 months, we've kind of flattened out there. And I think most of the liquidity that's coming out now is coming out of the Treasury General account. And we don't know. We don't know what that's going to do. We'll have to see over the next few months. But keeping an eye on those two things, I think as long as those levels are elevated above the zero line, then I don't think we have to worry about there being a liquidity crunch, which is really the only thing that, in my opinion, that's going to cause a major bearish correction. So now that doesn't mean you can't have some big pullbacks inside of it. Would be really healthy, to be honest, for Nvidia to have a 10 or 15% pullback, maybe even a 20% pullback right here, because it's had such a meteoric run. I mean, it's up 180% year to date. It's had a huge move. So for them to have a 20, even a 30% pullback, I view that as a longer term buying opportunity if it happens, if it's that big of a pullback. I just hope it doesn't have another 5% drop tomorrow, because my covered call is still in the money at this point. I've got a 123 short call, and so we finished at 127 and change today. I got about $4 of cushion for tomorrow. We'll see. Do you know what? If it expires, I own the stock and I'll sell another covered call.
Yeah, you'll do fine. And earlier this week I shared with our community a bearish trade on Apple, which this morning I was thinking I might need to adjust it, but it's actually doing quite nicely right now. So Apple down significantly here. Yeah, I know we're kind of throwing around a lot of different topics here, but I think the key message is that I mean Trish, I was listening to the news and I was feeling like, we're in a bear market. This is hardly a bear market. And is this when is this the day that things turned? It'll be clear to us later. So, I mean, I don't think that this is the end. Going to some of the other stuff, though, you want to go through some of the points about some of the takeaways from the
Yeah, let's
meeting?
talk. Let's talk a little bit about Lockhart, because I think that's what's moved the markets today, is this assumption with the CPI, and that it now means the Fed is going to start cutting rates maybe as early as September. And I think Lockhart gave us some pretty good color at this conference of really his opinion. Now, again, he's not a voting member of the Fed anymore. He is retired. He's a former member of but he was the Atlanta Fed president for what, 10 years, 12
Yeah,
years, something like
10
that.
years. Yeah. Or maybe
Um,
at least 10. Yeah.
yeah, and so I think one of the things that stood out to me, and I know you and I both took notes while he was talking, in his opinion, the labor market is being as strong as it is, gives the Fed a little bit of cushion on being slow.
Right.
They'd rather let the economy get a little bit too weak right now, because the labor market is as strong as it is. And I think we got a little bit of a hint from Powell from that yesterday too, in his conversation on Congress, or at Congress, that his focus is now maybe looking at employment and making sure employment stays steady, because they feel like they've got the direction going, or they've got the economy going in the right direction. They've got inflation going in the right direction. But that doesn't mean they have to turn and cut rates yet, as long as employment stays okay. In fact, to quote Dennis Lockhart, he said, "Let's see some numbers below 2.5%
Right. Well, yeah,
before we jump there."
right. Because, yeah, I remember who asked that. It was an economist from one of the big wealth management companies asked the question of, Jay has said we don't need to see two, we need to see that we're got a trajectory towards two. And there was some pushback to try and get Dennis to say, well, what number would that be? And this is, Dennis isn't there and he doesn't know, but his opinion was something under 2.5. So we need to see a number under 2.5, at least heading in that direction. And we're talking about the PCE number. Yeah, you just to amplify what you said is, he said our narrative today is that we get a cooling economy with a very healthy labor market. And as you mentioned, that gives them the Fed a lot of leeway as long as labor is doing okay, and they could probably let it get a little higher, let jobs go. I mean, it's been said for a while that they were a single mandate Fed where they're focused only on inflation. People seem to be raising some of this change in jobs, and I think the Fed have been pretty clear that's what's most important now is getting inflation under control. Um, but I like, one of the things that was kind of neat was some of the discussion about, how things work, in that meeting, in the Eccles building where the Federal Reserve gets together, what is it, 8 times a year, and meets, and then it's a room full of people, and how does it work? I mean, most people don't get to see what happens in that room. There's no press, and what happens in there. There's minutes that are taken, but those are very specific. First, so half of the people that vote are, well, not half. There's 6 governors in the Fed and the Fed president, and then there's the regional presidents who rotate. And the regional presidents, they've got quite a staff. I mean, Dennis, I think, I know that in Chicago, I think there's 1,200 people working for the Chicago Fed. And Dennis has a similar number of people, like 1,000 people, some of the smartest economists in the world, at least in the United States, working at the Federal Reserve. And they're running models, which was, this is another key point that Dennis said is the Fed doesn't know what they're going to do because they don't know what they can't say what they're going to do because they don't know what they're going to do because it's going to be data dependent. And the other thing he said is that they get the same data everybody else gets. They don't have any proprietary data. All the data is out there. It's all published from the same sources. Some of it they get early, like they get an embargoed report, like maybe 24 hours ahead of time. And they're using these models to run the data to try and make a forecast. And they're doing their best. And we talked about the dot plots and what those are. And some people listen to the dot plots and say, this is what the Fed says is going to happen. I mean, the 2 quarters ago, when the dot plots came out in March, people say, oh, the Fed has told us they're going to have 2 rate cuts. And when I hear this in the news, it's like the Fed didn't tell us they're going to have 2 rate cuts. That's the consensus on the dot plots. And, everybody's putting way too much focus on the dot plots. First of all, he said they work backwards. This is what they normally do is they say let's assume 3 years we have the right monetary policy and we get to our goal. And then they work backwards from that. And, if you're trying to forecast anything else, Dennis and I talk because that I participate in the Chicago Federal Reserve's economic outlook every December, and I provide a forecast. And I've been recognized 4 times for excellence in forecasting. I do a pretty good job. And Dennis was like, he wanted to talk to me. We sat next to each other. He wanted to talk to me about how I do the forecasting. And he said, forecasting a year or two out because I only do 16 months. Or I'm sorry, 6 quarters. And he says, really, anything beyond 6 quarters, who knows? A 3-year forecast is useless. And that's what the dot plots are. They go 1, 2, and 3 years and 4 different areas. And yes, there's models that are in there, but what he said you should look at probably more is not, and what gets reported is the average. He said, really, what you want to look at is the spread and see where the range is. And that's probably a better idea of where we're going to be. And he said he always hated putting the models in. And then they get data right before the meeting. And there's this huge process to put the forecast together, not even the forecast, but whatever the statement is for the meeting. And then right before the meeting, they get an economic report, which would change their analysis. But because there's this process that takes weeks to build consensus among all these people that work for them, they're not going to change anything. It's not going to change in this meeting. It changes in the other meeting. Were there any of the other inside sort of baseball stuff that you thought was interesting?
Well, I loved how he pointed out that there were, and he said it, you basically said the exact same thing I'm saying, but I loved how he pointed out, it's like, we're 19 different people coming to that room.
Right.
And we all have our own opinion. And we come to this consensus in the meeting. It's like, we don't talk to each other before we go to the meeting. I love the analogy, how he said, some of the governors are doing their homework on the back of a napkin. Sometimes he's like, I got a whole staff working for me, but to come up with their opinion on things. But I would say that, he did mention that he feels that the whole um, FOMC right now is leaning towards cutting. And that's what they want to do. It's just really a matter of when. And because they have this relatively strong economy, strong labor market, um, with inflation coming down, I mean, it's like you said, Jay Powell arguably deserves um, a Nobel Peace Prize in economics for pulling this soft landing off that I think 2 years ago at the end of 2022 when inflation was coming off of 9%. I think that was about where our high reading was in 2022. And everyone was fearful about where this was leading and how are we going to cool this thing down and not cause a massive recession. Uh, I think the Fed and team have done a fantastic job of getting us to where we are today. Does that mean we're all the way through it yet? No, we've still got some hurdles to clear. We still have this this unknown of what's going to happen that we pointed out earlier of what are we going to do when this excess liquidity runs out? How are the markets going to act then? Are we going to price appropriately? You know, there was a lot of conversation. I know it's not this conversation, but there was a lot of conversation about debt and monetizing debt. That is still a challenge going forward. But I think Dennis is pretty optimistic about where we're at. I think we've done a good job.
Yeah. And just to reiterate your bit about leaning to, he thinks the Fed is leaning towards cutting. We have a Fed that wants to cut. However, and this goes back to something I already mentioned, is that they're going to want to wait until they get a crystal clear
Yep.
picture that he several times mentioned signal to noise, and we need to get the noise right now. Some of these data are very, very choppy, and they vary quite a bit. And so he's going to want to see that we've got that we're clear that we're not actually looking at a noise or variability. So yeah, his sentiment, I think, would be interesting to talk to him right now because his sentiment was, I don't think we're going to cut in September. That was kind of his, if you forced him. I wonder if today, after seeing CPI today, if he'd feel different. I think he would. I think he'd feel differently. I think he'd say,
I do too. In fact, it'd be interesting to see if Don Rissmiller from Strategas, he was saying that he thinks we're cutting in December, or excuse me, September. Um, I'm sure he's a little more confident in his conversation yesterday as well that he had. I was very intrigued about the strength um, and how good of a job Strategas did at that conference. They have they continue to be a fantastic organization to be associated with. Eric and I have had the opportunity to spend a lot of time with Don Rissmiller specifically. And they do a great job with research. And I had several really good takeaways of their expectations of the future of what concerns they have about debt levels and what that means for the economy going forward, and how and how to trade it, how to continue to make money inside of the opportunities that come up because of that. So
before we go too far off, I wanted to capture something that we've touched on here in the past, and this is something I don't think Biden gets enough credit for, and that is a shift towards a national industrial policy. And I took note of Dennis's words, were that it's been a profound effect, and there's a tectonic shift that's happening here on the fiscal side of the house. And he mentioned several references to follow back up on. And that certainly could change with a different president here, with a different policy. But we think of the CHIPS Act, that's actually in the Inflation Reduction Act, have had profound impacts that we're seeing. I don't think Biden gets enough credit for that. well, anyways, we'll see. We talked about elections, so he might not be around to get credit for it, anyways.
Yeah, I think that to me is one of the big unknowns that could have a catalyst effect to put some volatility into the market, is depending on who we get here in 2 weeks. And
What
maybe we don't have
about
to wait 2 weeks.
so shifting gears? The next guy who talked was David Kotok, who's a good friend of ours. Um, David didn't make it. He's doing okay. He's got some health issues, but that's not why he wasn't there. But he did a webcast, and he presented something that was very, very esoteric. But the average person, the average smart person, wouldn't understand what he talked about. But he did paint a pretty clear picture, um, talking about credit default swaps valued in euros, looking at U.S. debt and looking at different tenors of the debt, and being able to paint a very clear picture of how this is pricing out. And what he's talking about, specifically the craziness that happened with Marjorie Taylor Greene and a few other Congress people messing with the debt ceiling and threatening to shut down, and that you could see specifically to the day, as these different things were playing out, how this affect credit default swaps. And to put things in their perspective, we're talking about notional values that are in the trillions of dollars, and it does impact that these, for lack of a better word, games that are played, and they have a cost. Now I would bet that the people who are playing the games have no idea that it is costing us tens of billions of dollars. I think David said something like $23 billion is what we're paying extra, because the credit default swap is, assuming that the U.S. defaults on its credit, which has never happened. I mean, that's we don't have the cleanest I don't know, cleanest shirt in the laundry, but we're one of the best, one of the safest places globally for debt. And there are actually other countries that have higher debt ratings than us, but we're one of the best, and we've never defaulted. And this is significant since what's happened last year. You could He prints up the charts and shows it. It makes me want to pick up the phone and call a congressman or two and say, "Do you realize that what you're doing is costing the United States tens of billions of dollars? And we pay it. It goes. I mean, it's a cost that we have to pay." I don't know.
I saw a tweet earlier today. Today, or this last month, and this goes to kind of the discussion that David and Don Rissmiller were having at the conversation about national debt and the amount of debt that we are carrying. We paid $140 billion in interest this month on our debt.
Nice.
100 billion, 140 billion on interest in 1 month. And it's obviously climbing because our deficits continue to rise. I mean, we've got a $2 trillion deficit currently. And I thought it was interesting, again, in the conversation this weekend, there was a conversation about the two different sides, and each one of them is scrambling right now, because if they end up winning Congress, which is the ones who have the responsibility to come up with the budget, right?
Right.
Neither one of them, Republicans or Democrats, have any idea how to put together a budget right now.
Right.
Of how to fiscally get some type of austerity that's going on. And
Well,
And that's why we're seeing those credit default swaps increase in price, right?
yeah,
Is that massive amount of debt that we're
at
carrying.
some point, some Congress, some is going to have to come to a consensus on a very tough decision, which involves two things, and that is raising taxes or reducing spending. Because Don pointed out, it's not so much our debt. People are talking about our debt being 100% roughly now of GDP, and it could be 150 and still be okay, as long as our deficits are in check. Uh, that's Don's takeaway, is it's the deficit that matters more and not so much the debt. And looking at the servicing of the debt is not so bad. Now, he did talk about, um, people have said that we need to cut rates because of the debt. And you can either control inflation or you can control your debt. You can't do both. And if we decide to attack inflation, attack our debt by lowering our interest rates so that the cost to service the debt goes down, inflation will get out of control. And that's not the decision that's being made right now. But Congress needs to, they need to balance the budget. They need to stop spending, and we probably need to raise taxes. And that's probably something that I don't like either one of them. I do like not spending money, but I don't like raising taxes. But we're probably going to have to decide to do one of those two things. And there was a long discussion going all the way back to Reagan, and how the different tax policies have played out. And we're probably going to see some form of a wealth tax coming out. I don't know exactly how do you tax, you know, Jeff Bezos, who has, 400 billion dollars in Amazon stock. I don't know how you tax that, but
Yeah, and that was the point that Jeremy Schwartz made from Wisdom Tree, which hopefully we'll get Jeremy on this program one of these days. We actually talked to him about it, and he's open to it. So we're good. We're gonna hopefully get Jeremy on here to share some of his thoughts about this. But he shared that example of Japan basically doing that as an example of the Japanese people, the finance minister convinced the Japanese people to be okay with a certain level of wealth tax. And only a very wealthy country can do this, obviously. That they agree to the idea that, hey, we're going to give the government $100 and as an investment to buy your bonds, and we're going to give you $90 back or $94 back as a return, and that's a
yeah.
wealth tax, right?
And people could take their money and they could go invest it elsewhere and get a better return. And because they're patriotic or support their countries and realize they need to, people are willing to make those personal sacrifices. And that's what happened. The Japanese population willingly took a terrible return, in order to help the country. And that, you think of Japan and their demographics, and we skipped right over, one of my favorite portions. Two of my favorite people is Dana Peterson, is the chief economist of, the conference board, and then Holly Wade, who is she's a rock star. I love her. She's with NFIB, and so she does. They, between the two of them, they got small businesses, big businesses. But one of the things that came out, so clear issue there, is that inflation is due in large part to labor. We've got labor rates, and they're still having difficulty. One of the key issues facing both big and small businesses is finding talent and finding qualified talent. And they got job openings are high. And because of this, and because of job switching, we're seeing significant inflation in wages. And that's, for the person who's getting the money, that's great, but that's going to continue to contribute to inflation. So we'll see that play out. But one of the things that came up was the demographic pictures, and there's some really stunning data. In fact, there was somebody from the Central Bank of Korea there that I had or South Korea had an opportunity to talk to, and what big concerns they are. I don't know if you saw South Korea on the chart. They have
I did. They're one of the worst.
they have the worst fertility rates. And he said, yeah, we've got a serious problem. In fact, they have just appointed a new minister of fertility. It's not a joke, to help encourage people to have babies in South Korea.
Uh,
And listen, everybody listening to me. I think there's at least half of our people out here who think we should shut the borders. And that's, whatever your opinions are great, but you should really rationalize and understand that that you need somebody to pay taxes so that you can get your Medicare and your Social Security. We can see a crisis on the horizon, and there's only two ways to fix it. Well, there's one way to fix it, and that is to get more working people. You need 3.5 people working for you when you're retired and you're on Medicare. You need 3.5 people. And the data is going down. If you look at the demographics and look at the ages of where people are, and then throw in the fact that you're probably going to live longer. Everybody here is going to live longer than we all think because healthcare improvements and all these other things. You need more people. That's the solution. So how do we get more people? There's only two ways that I know of. One is you have more babies. The other way is immigration. And I feel strongly about illegal immigration. It's a very touchy situation. But there are a lot of people that want to come to this country. And that, unfortunately, it's going to hurt some other countries. In this case, I'm an American exceptionalist. Plus, I want to get my Medicare eventually and my Social Security. We seriously need more people in this country to be working, and those are the only two ways to fix it. So if if you're on the side of shutting the borders and not letting anybody in, you should be doing everything you can to encourage your kids to have babies.
I think that's, and going back to that point and tying that into the sustainability of our system that we have in place and the amount of debt, we cannot continue to monetize at the rate that we are because eventually there will be a system breaking point. We're not there yet. We may be decades from being there. Maybe our children and grandchildren that have to deal with it. But the path that we are on, I mean, Fed Chair Powell said it yesterday again, fiscally, the path is unsustainable that we are on. We cannot borrow our way. We cannot print money our way out of this problem. And so you're right. We either have to fix it with immigration. Productivity is another argument that some people will make that, well, we can just become more productive and create more money. The problem with productivity gains is a lot of times those just end up being concentrated. They're not always across the board. And they're concentrated at industry and don't always equate to higher amounts of employment necessarily right out of the gate. So I agree. Immigration is something that we have to be willing to say, yes, we want immigration. But I'm even of the opinion that I don't think we can fix it with those two things either. I think we have to fix it by tightening our belts, and we
Well,
have
so
a
yeah, it's
reckoning
either that or
someday.
you give up on your entitlements. So
I think the entitlements have to change. And I say that, I'm in a situation now that, I've paid into these entitlements for 30 some years. As a 52-year-old guy, I'm, 15 years away from being able to start pulling Social Security. I recognize I've spent a lot of time paying into it, and I probably am not going to be able to get what my parents are getting right now because it's not sustainable. And that's the hard discussion, especially politically right now, that no politician is willing to step up and make because that's where it's decided, right? This isn't decided by the Fed. This isn't decided by somebody over at Goldman Sachs or the Bank of Japan. This is decided by Congress and the Senate. And that's where the political spine, the people, they have to have the spine to be able to stand up and say, let's do this. Historically, the problem is anyone who has stood up and said that gets voted out.
right.
Because their opposition says this guy wants to take away your entitlements. So it's a Minsky moment, maybe,
Yeah,
that we're in.
there you go.
A
That's a
Minsky
McCully.
moment.
That's a McCully quote.
That is a Macaulay. I like Paul Macaulay.
Sure.
So did you see Katie's pick? You remember what one of Katie's number one picks there was, stock picking wise?
No, what?
It was the regional bank
Oh,
ETF,
yeah.
KRE. You see
Carrie.
up 4% today.
What?
Yeah, she nailed that one. Um, Katie does a great job, by the way. For those of you who don't follow Katie Stockton, she's another one we hope to get on our program one day. Katie owns a company called Fairlead. Fairlead?
Yeah, fairly.
Fairlead, based in Connecticut. Technical analysis is what she does.
Right. And they've got their own
100%.
proprietary approach that they look at, and they look at
Yep.
different time frames, and they provide insight to a lot of to the a lot of the large wealth managers. So, and she's actually releasing. She said it's going well, but apparently she has an ETF now that's, and I think it's through Jeremy at Wisdom Tree.
I think you're right.
Yeah, like Bianco. So Bianco has his ETF there, which is going well. But I think maybe wrapping this discussion up on circling back to some of the stuff on the election here, we're going to certainly see a lot more. We're going to see a different year this year than we've seen in the past. That the whole political volatility is starting right now. We're getting on the cusp of it getting really silly, and as silly as it seems right now, it's going to get sillier. There's going to be craziness coming up. July 15th, we had the Democratic convention. There was some discussion about how the Secret Service isn't providing adequate security. I can share this here. I think I can. So my neighbor's a psychiatrist, and we got together this weekend and hung out at dinner. We're just chatting, and he's talking about some of the stuff that he does. And he says he's shocked by the number of patients he has who talk about wanting to see Trump dead.
What?
Yeah. He said, I am shocked that a notable number of my patients want to see him killed. They're that upset about him. And he said, I don't really like the guy, but can you imagine? I mean, and I said, I mean, we were having the conversation from an ethical standpoint. So what do you do when somebody's talking, and I said, I can't react. And I have to be, what makes you feel that way? And, and instead he's like, what? So he's, do I need to tell somebody about this? And so far, he said they haven't expressed any sort of plans or actions, just more of a desire that they want to see it happen. But one of the concerns about this, so July 15th is when this committee begins in Wisconsin, the convention, and the Republicans are complaining that Secret Service doesn't have enough security, and they already know there's going to be protests there. And then right after that, the Democratic National, the DNC, July 19th, the nomination process begins. Vice presidential debates. We'll probably have another presidential debate too. Who knows? We don't know who the VP is, but we should know. Are we going to know in the next week who's that going to be? Well, one of the things that I heard in this meeting is that there's the list, and then there's the real list. So we've seen the names, and like some names are thrown away around that, like Pompeo might actually end up being on there, and very interesting thoughts about the strategy of who you pick. And a lot of it depends on who you're running against, right? So there's some interesting, the only nationally vetted person is actually Nikki Haley.
Yeah.
She's the only nationally vetted person. You got people that are regionally vetted, the governors or people who are from different areas. Um, and it's certainly there's some
I
key
told you who I
points.
would like, right?
Who?
I'd love to see
Oh,
Tulsi
Tulsi
Gabbard.
Gabbard. Yeah. Yeah. I don't think that would happen either. I don't
I
think
don't
there's
think
a
so
chance of
either.
that. No. We'll see though. I mean, we're gonna find out. And then we got Jackson Hole coming up in August. And there's actually going to be a surge of liquidity that's going to come in because of the business taxes that need to be paid. So there's estimated of another $250 billion that's going to come into the treasury, which is essentially more liquidity. This could be bullish for the markets. August 22nd through the 24th is the Jackson Hole conference. Um, in September, there's the Hunter Biden tax trial. That's going to be crazy. September 10th is the second presidential debate. Then there's another liquidity squeeze that comes in there. And then September 16th, early voting starts. And I didn't realize this. I mean, I'm actually a volunteer. I'm treasurer of a local campaign. I kind of got roped into doing this. A friend of mine is running for a judge, and I'm the treasurer of his campaign. And I'm amazed at the data that I'm able to get, we're able to get on the campaign. And so we know everybody who votes, and we know how they voted for the past, I think we see the past 5 elections or something. That data is out there. And so the people who are running campaigns, this election is going to come down to 17 counties. I mean, there's 17 counties that are going to swing this election. And the people who are running the campaigns know everybody who's registered and know if you voted. And with early voting, they're going to know that you have voted. So even anybody who says, I don't want to vote, I don't have time, they're going to they're going to vote because they're going to. I'm lucky I don't live in one of those 17 counties. I feel bad if you do, because you're going to be hounded. And then the interesting thing, what about that? We talked about how close this could be. There is a scenario
Yeah.
where there's 269 electoral votes each, which is a tie, which means what happens next?
The House of Representatives then chooses the president,
And
and the Senate chooses the vice president.
right. And so we have a Republican House and a Democratic Senate. If we have that, because this happens after the election,
Yep.
we could, in theory, have
Donald Trump
and
and
Kamala
Kamala Harris.
Harris as our president and vice president. That could happen.
That could happen. Let's hope not. That
Yeah.
would be a
Oh,
chaos.
and Trump's
We don't,
conviction is in there too. So
we don't want chaos. That's my hope is, regardless of who ends up winning, my hope is that the Democrats can find someone that they can. Well, my hope is one of two things. To be honest, I would love to say, and again, this is not politically leaning any way. Either Biden says, "Yep, I'm in," and they just get all behind him and go with it, and then the market will price in who it thinks is going to win, and then we're fine. What I don't want to see happen is, I don't want to see us get into July and see protests and riots and violence similar to what happened in 1968, happened at the Republican convention, and then followed up at the Democratic convention in August with, we don't know. And they
we
even
already
go to
know
the
that Gaza,
convention.
there's going to be pro Gaza contest protests that are going to happen at that convention. So
Right.
there's going to be some stuff happening at both. It's
And so my hope is we can get to get a solid, here's our candidate, let's have an election now and get to the election and move on with life.
and the bottom line is, and we've said this here before, is that and it was kind of it was a different sort of argument, but the bottom line is that overall for the market, it probably doesn't matter which one it is. The market's going to do okay because a lot of that is being driven by liquidity, and there's plenty of tailwind to keep the market going. However, there will be some puts and takes, and just like we're seeing today with the IWM or the Russell 2000 being up 3 something% and seeing the S&P Dow down. So there's going to be different sectors are going to play out differently, and that's maybe something we can explore in other episodes going down the future, because we could probably spend a lot of time, whether it's healthcare, industrials, or defensive stocks and travel stocks and banks, and they're all going to play out a little bit differently.
I wish we had more time. We could keep going on this. I got to go do the daily market update for options animals. So
Okay, you have fun. It's good talking to you. It was
it
good
was,
seeing you.
it was good to see you yesterday too. I'm gonna have to mail you bread. I'm sorry. I didn't
Don't
send
think
you
I didn't
home.
notice.
I
I
didn't
didn't.
send you home with a loaf of bread. I will put it in the mail.
No, it's fine.
No, it'll get
Eventually,
there. I promise.
eventually, eventually.
Eventually. All right. Thanks, everybody. Thanks for listening to us. We'll see you all at the next one.
Take care.